Hi everyone, this is Dr. Chandrakantha. Welcome back to my commerce class. In this video, I am going to explain about the different kinds of accounts. In the previous session, we have learned about single entry system of accounting and double entry system of accounting. Once you go through the previous video to understand about the concepts of debit and credit and the dual concept of double entry system of accounting. This dual system depends on the classification of accounts and we are going to learn about it so that we can understand the golden rules of debit and credit. To gain the knowledge of identification of accounts, it is better to understand the different types of accounts. In accounting, the accounts are mainly classified into three types. Okay, so that helps to identify the accounts. Okay, the one is personal account, another one is real account, the next one is nominal account. So we have three types of accounts: personal account, real account, nominal account. Okay, this is the basic concept you have to understand the accounting rules. Once you understand the accounting rules, you will be able to identify the debit and credit of each transaction. Okay, what is personal account? So personal account may be in any individual or institution, maybe an individual or institutions, okay, organizations, what we call organizations, banks and all comes here. So maybe a natural, what we said, individual, Ramesh, Anand. Artificial means maybe any entity, organization, as I said, organization, entity. Okay, banking institutions, all this comes under the personal account. You can identify with the name. Okay, we can identify with the name. So natural or maybe an artificial. And the next one is a real account. So real account, all the fixed assets of the organization. All fixed assets of the organization. Fixed means capital assets. That means assets which have been taken to run the business, which have a value for a longer duration. Okay, such items. When we again classify the assets, what are the assets we have in the organization? Assets are classified like tangible assets and intangible assets. So tangible means, all of you know, visible. You can touch it, you can feel it. Okay, maybe the machinery, land, furniture, all these comes here. Okay, so land, furniture, even cash also asset. Okay, so all this comes here. A bank balance, all this comes here. So intangible, we have some intangible assets also which are not visible but they are identified as assets of the organization. For example, goodwill, patent rights, okay, trademark, what we call trademark. Okay, so these are the brands. Okay, so goodwill is a fame or the name or the prestige or the status what you have for the organization, which is measured in terms of money and that will be treated as an asset. Okay, and you may be having a copyright or a patent right on any particular asset or an equation that is not visible, will be treated as a asset of the organization and to be considered as real account. Okay, then we have a nominal account. So it's classified as expenses and income. Any kind of revenue expenses, all revenue expenses treated as nominal account. All revenue incomes treated as nominal account. So expenses like a rent paid, salary paid. Okay, all these treated as expenses and comes under the nominal account. Incomes, commission received, consultancy charges, consultancy income. So consultancy income, not you are not paying, but you are receiving. When you are receiving, it's an income. Okay, so such things, such revenue incomes or any interest received. Okay, interest received. All this comes under the income and they are treated as nominal account. So interest payable is an expenses, again nominal account. Interest received is an income, again nominal account. Okay, so likewise we have broadly three types of accounts. Remember, three types of accounts. The one is personal account, second one is real account, third one is nominal account. This is most important. Once you are able to identify the accounts like a personal account, real account or nominal account in each transaction, you will be able to understand accounting rules properly and you will be able to apply the same rules while generalizing the transactions. Okay, so again I'll repeat. Personal account is an individual or an institution. So what we call maybe a natural person or an artificial person. Okay, so like a name of the person, name of the institutions, banks, organization, XY company limited, all these comes under the personal account. So real account, assets, all assets of the organization, fixed assets of the organizations. Okay, so maybe cash, land, furniture, machinery, all these assets which have been taken as a capital asset taken for the organization. Okay, and that also includes some certain intangible assets like goodwill, patent, copyright, trademark and all. And the third one is nominal account, where you have to identify business expenses and the incomes what you are earning in running the business. All expenses and all incomes will be treated as nominal account, but expenses and incomes which is to be debited, which is to be credited, that we'll learn when we go for accounting rules. Okay, so let us take some examples to understand the different types of accounts. Okay, so I have taken some examples here to classify the accounts. The one is cash account, salary account, interest account, furniture, Anand's capital account, bank account, goodwill, stock, XYZ company, rent, bank, loan, and investments. Like we have taken certain accounts here. Let us understand which account it is. Cash account, which one? It is an asset, no? So when it is an asset, it comes under the real account. So all assets to be taken under the real account. Salary, it's an expenses. Once it is an expenses, comes under the nominal account. Interest received, income. Okay, expenses and incomes comes under the nominal account. Furniture, as I said, it is an asset. Asset comes under the real account. Anand's capital, name is there, no? Anand capital. So personal individual account, it